Bandhan Mutual Fund presents MF Corner.
Hello and welcome to the special edition of MF Corner YouTube edition. Thank you so much as always for tuning in. Now I know what's interesting all of y'all and y'all keep asking us questions is multi-asset funds. What are they? What should we be doing with that? How much should you actually invest in all of this? Now to talk to us about all of this, break this down for us, we do have Raghav Iyengar, who is the CEO at 361 Asset joining in with us. Raghav, thank you so much for joining in with us.
Thank you so much for having me here.
And Raghav, we have a lot of investor queries that come in like, should I start investing here? What should investors first look at when they're looking at multi-asset funds? Are there any specific matrices that they have to look at before they invest in such kind of funds? What is the purpose of this fund actually?
So multi-asset funds are part of this whole hybrid category. Right. As you know, mutual funds are largely equity funds, which invest mostly in equity, debt funds, and hybrid funds. Right? Hybrid is a combination of various things. Now, multi-asset, just visualize, Vinny, this is like a great thali.
Yeah.
Okay, you got a bit of equity, you got gold, you got silver, you got international equity, you got real estate, you got investment trusts, you got a whole. So all these things actually give you a very, very good investment outcome if you hold it over a period of time.
Right.
Because all of these are different asset classes. Today the challenge is how much of each asset class should we put in?
Right.
Do we take out from silver? Do we put it in gold? Do we redeem gold? All that. This fund tries to optimize for all of that. Yeah. This type of scheme. Yeah.
Raghav, my question comes in that given this fund has everything, right? You have your full platter ready here.
Yeah,
okay.
Literally, yes.
So how much of my core portfolio, is it a part of that core portfolio now? Does it become your core portfolio? Or how much percent of my overall mutual fund portfolio should actually now start going to such an asset?
So Vinny, I am going to be a bit biased on this because I have like more than 25% of my portfolio sitting in multi-asset funds.
Okay.
And that's largely because of two things. I think as you know, the headlines are very, very weird nowadays. We are living in a very, very uncertain world. Headlines are screaming more than fundamentals. There's a lot of noise, right? So how do you perform in a market which is full of noise is that you have to have a lot of flexibility. This portfolio gives you that flexibility. This type of schemes gives you that flexibility. Like I said, you can do a variety of things with it. So you don't know at various points of time, various asset classes will perform. And the confusion in the investor mind is, should I be in this asset or should I be in that asset? This scheme, this type of scheme actually removes a lot of that confusion.
Okay.
So, and it's also ideal for someone like me. I'm a very lazy investor. I'm a very long-term guy. I don't think I've redeemed money for a very, very long time. So I'll rather take this and give as much flexibility to my portfolio manager and ask them to sort of manage it in the right way, given the market circumstance. Yeah.
Raghav, I want to understand that what sort of an investor should look at it? Okay, we are lazy, we don't care, we are ready to hold it for the long term. But there are someone who is aggressive or someone who's at a moderate level, conservative. Who should be looking at it in terms of risk and return?
So multi-asset has an interesting combination, Vinny. So there are some which are more hybrid oriented, which have a lesser amount of money parked in equity. Those are largely for stable investments, right? Maybe slightly shorter duration. There's some multi-asset funds which have much more allocation to equity. So they are obviously the more aggressive type. So obviously one question you ask yourself is, hey, how long is this money for? Number two, if it goes down by 20%, how am I going to feel?
Yeah.
And if you're going to say both these are fine, then you should go with the ones which have higher equity allocation. But if you're somebody who gets a little more worried, people like me who want the stability more than the excitement, then obviously the one that I would go for is something with slightly lower levels of equity and of course more gold, more commodities, more debt, etc. Right?
So in the long term, if I'm looking for the long term, then you should look at what should be my portion of equity allocation in the multi-asset. What kind of a fund should I be selecting? Less equity, more equity in the long term?
So I think, that's very, very individual, Vinny. But in today's environment, I would like to give equal allocation to all the big asset classes, which is effectively debt, equity and gold, silver and other assets.
Okay. So that's the safest way.
In today's world, I think
specifically.
It actually allows you to stay invested for a long time. It keeps you calm. And more importantly, it doesn't make you get off the investment train, right? Yeah. That's the big one for all of us.
Absolutely. Today. And these, as a sort, given you are also looking at it so closely, do they normally, how does the return work? Do they outperform our normally equity returns or, they are a bit moderate versus
they're obviously much more moderate, but, there's something called risk-adjusted return, right? There's the amount of money that you for the amount of risk that you are taking, are you making enough money?
Yeah.
So obviously in that spectrum, equity is the best because you're taking the highest risk, obviously gives you the highest return.
Yeah.
But there are many, but in this kind of a fund, because it combines specifically equity and gold. Now this is interesting because equity and gold have sort of given very similar returns over the last 10 years.
I mean, that's the most.
But gold hasn't fallen as much as equity, right? It doesn't draw down as much. So this combination of equity, gold, silver and debt actually gives you a far better risk adjusted return maybe than pure equity funds.
Okay. Raghav,
so just to give you a sense, Vinny, just if you look back, we've had two big cracks in the market, right? In the recent past, 22 and 25.
Yeah.
Both of those cracks saw equity categories dipping by double-digit returns going down. Whereas in these cases, the fall in returns was much lower. It was very
it's not that volatile
it's
as
not
much
that volatile,
because you
absolutely.
have the commodity and the debt portion coming in. So when equity is falling, maybe that gold is rising, the safe haven side, and silver has done wonderfully.
Oh, wonderful! Yes,
so
absolutely.
that's something that is giving more shine and respite also to such portfolios. But overall, what is your checklist? If I have to pick, there are so many options, right, available. So when I have to see your checklist as an investor, what should I be looking? According to each individual goals, we said that, you can look at the equity portion. What are other factors that I should keep an eye out on before investing in multi-asset?
See, multi-asset, as you know, is a very diversified scheme, right?
Yeah.
It puts everything. So one is you need to figure out, hey, is the product or is the scheme having enough allocation or ability to allocate to various asset classes, right? It should not be overly tilted to one particular asset class, be it debt or gold or equity. That's number one. Number two, remember this is a team of specialists working for you. So there are super guys in equity, there are super guys in debt, there are super guys in commodities. These three guys have to work together. Sort of figure out, hey, is there an asset allocation committee? Is there a CIO who's got that experience of seeing markets through cycles, who's sort of guiding these experts together? And lastly, of course, are the two important things which I tell everybody. Please don't go by last immediate returns.
No, because that's what you tend to see.
You tend to see that. And you may be looking at it at wrong points of time. Like today, if you look at it, the returns look spectacular
but then
for funds which have more allocation to equity. But is it the right thing to do from your perspective? We don't know, right? So look at that. If you can get these 2-3 things, that I think you're sorted. Yeah. I think the most important thing is to get invested, Vinny.
Okay. Absolutely.
That's critical.
And would you say at such a time right now, given that there is so much volatility in such funds, does it make sense looking at something SIP wise, or even if someone has lump sum left with them?
I would go lump sum.
I would go lump sum. Even right now is bonus season, everyone's getting all that.
I would go lump sum and keep topping up whenever I have money here.
Okay.
See, this category has seen fantastic flows. In the last 1 year, it's almost up 53% in terms of corpus, right? So I think it's not a niche category anymore. It's almost a 120 lakh crore category today, right? So in that, 1.2 lakh crore category. I wish it was 120 lakh crore. Sorry.
It will reach maybe at some point of time, given that it's picking up the pace.
And I think it's now, it has to go from an investor's niche category to a core category. So in fact, if I would advise investors to say that, hey, if you're going to come into markets at the first time or you're a repeat investor, I think multi-asset has to be a part of your investment.
What's the difference between multi-asset and flexi-cap?
Flexi-cap is only equity, Vinny.
Okay. And this is all asset
everything.
possible,
This is
right?
everything.
So obviously when you're flexi-cap is equity, all different caps, mid, small, large cap. While multi is all categories.
In all categories.
It is the difference between
them. So it's like the flexi-cap of the entire investment industry, if I were to look at it that way.
What is the biggest risk that is there for investing in multi-asset?
Oh, that's a great question, because most people only ask me the reward, and I think that's the great thing about CNBC. Anyway, I think, see, when you're investing in debt, you have to be careful where you're going to, right? Because if you get into, say, lower rated debt, you could have a capital issue. If you are in a fund which has higher levels of direct equity, then you will maybe be subject to drawdowns when markets tend to go a little volatile. But yeah, these are broadly the two big ones I can think about.
Okay, those are the big risks that are coming in there. We have spoken about pros and cons as well. And how much of one's portfolio should come to multi-asset now? What percent?
Again, very difficult question, because I think the fundamental theories of investing are all breaking down.
Yeah.
So earlier I would say, if you're, whatever is your age minus, you should be that much minus 40. So 60-40 funds were very popular, right? Or 50-50 funds. I think, but today, given that you need flexibility in your investments to manage the environment today, right? Because cycles are really not working out, right? Today, last year, for example, everything worked.
Yeah.
Equities did well, gold did well, silver did well, debt did well. So now, normally that doesn't happen. So I think
last year was those one-off years. Not everyone, because at the beginning of the year, everyone's like, oh, will we see this again?
And then it just happened. So I think if you are somebody who believes in giving your investments flexibility, I think I would put a large part of my money today in multi-asset today to work. Yeah. And again, the most important thing is because what multi-asset doesn't do is give you a great, the best outcome, but it gives you a great risk-adjusted outcome.
Yeah.
And that allows you to stay invested for longer time.
Yeah, longer period of time plus stability. If long term is there, why not watch out for stability? You don't need the money in the short term.
So, and the last thing is, you invest so you have some peace of mind, right? So you need to be calm in various market situations. If you're over invested in some asset class, that can give you a bit of stress. Either way. When markets do very well, you're stressed out. Should I take it out? When they're going down, you get stressed. Should I remove? This type of a scheme, multi-asset, allows you to sleep a bit more comfortably. So it's a great fill it, shut it, forget it fund. If I
not taking away your midnight sleep and keeping you calm and cool. That's also important when you're investing. But start investing. That's the word I think that you have to understand as well. Multi-cap surely, multi-asset allocation is surely an interesting bet that's coming in. Given that you get everything in one plate.
Absolutely.
And everything in that one platter. But thank you so much, Raghav, for joining in with us, explaining us what we should be watching out for and how exciting this sort of a fund is actually shaping up.
Thank you again. Thank you.
Bandhan Mutual Fund presents MF Corner.